In San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Google doubles down on commercial real estate investing in offices and data centers. The search giant promising to create at least 10,000 new jobs this year, an investment of $7 billion. What does it signal about the search giant's position on working from home? We'll discuss. Plus, the global chip shortage. How bad is it? None more able to answer that question than Qualcomm President and CEO-elect Cristiano Amon. I'll talk to him in an exclusive interview. And pandemic perspectives. 1 year on, education and venture capital, both a very different experience than a year ago. We're going to talk to Khan Academy's Sal Khan and Sequoia Capital's Roelof Botha. All those stories in a moment, but first, a tech sell-off dragging down the NASDAQ today. Our Ed Ledlow is in San Francisco with the latest. Ed, Kriti Gupta with us as well to talk about markets. Ed, let's start with you.
Yeah, I mean, how quickly things change. 24 hours ago, I was standing here saying the markets had taken a sigh of relief, mostly sanguine about the Fed holding rates near zero through 2023. Fast forward to Thursday, worries about inflation, a lot of pain for tech stocks, treasury yields rising. You see the S&P 500, the main gauge of US equities, down the most in 3 weeks, down 1.5%. But tech, the real underperformer, right? The NASDAQ 100, that tech-heavy index, down 3.13%, also the biggest drop in 3 weeks. And it's no surprise then that the NYSE FANG Plus index, which is that basket of big cap tech stocks with stretched valuations, some of the biggest points decliners on the NASDAQ 100 as well, also down 3.6%. And as I said, the environment here is one where treasury yields have been rising. US 10-year yield above 1.7%, its highest in about a year. You factor into that inflation concerns, we're back to that narrative. Rising yields, rising inflations, investors concerned about tech stocks with stretched valuations. Come with me into my Bloomberg and look at this chart, because it really sets up the question from this point. How long is this environment going to last? If you look on the far right-hand side of your screen, that is the longest streak of weekly gains in the US 10-year yield since the start of 2018. And that is a significant streak. So how long is it going to last? That is the question. If you're a tech bull or a tech bear, that is what you want to know right now. And fast forward to today, right, the present, the economy, the vaccine rollout, those are two big factors as well. And if you look at the different sections of the equity market over the last 12 months since the start of the pandemic, it's actually small caps, the Russell 2000, that have outperformed both the NASDAQ 100 and the S&P 500, the orange line down the bottom. Those are the stocks that are most closely tied to an economic recovery, the most sensitive to a reopening. But it is interesting that the gap between the S&P 500 and the NASDAQ 100, that white line, has kind of closed recently, but the outperformance of small cap has continued. We know that that's the other part of the story. Investors pulling money from those riskier assets, those growth stocks like big tech, and putting them into that reopening trade or that reflation trade. So lots to consider. Lots of going on in the broader markets, but also lots of specific names moving today as well. And Kriti Gupta, what are you looking at?
Well, Ed, thank you. It's really all about those big tech names. You talked about the pain. I just want to show you what it did to Cathie Wood's very famous ARK ETF. You can see right behind me a 5.8% decline. And look at what was hit the largest. Its largest holdings, actually, Tesla, Square, and of course, Teladoc. So I want to show you here. Tesla especially dealing with some issues over in the UK, their subsidy getting denied. You are also seeing some pain in Square as well. I believe 9% decline you can see right behind me. And then of course Teladoc also getting spooked on the idea that Amazon may be entering the telemedicine business, even though that did not stop Cathie Wood from including more of that stake in her funds as well. So really a broad tech loss. If you flip up the boards and actually look at some other earnings stories, though, you are seeing Nike trade after hours, still carrying on some of that pain that it saw during the session. This, of course, following its earnings missing some of those estimates on Wall Street. This is a really important stock to look at because it has a lot to do with consumer sentiment, with consumer spending. And here in the States, you're still seeing that kind of grow a little. Abroad, though, a very different story. I want to show you this statistic really quickly. Abroad, though, in China, sales jumped a whopping 51%. And as we talk about that K-shaped recovery, the stock market already seems to be pricing that in. in. Things like high-end retailers like Williams and Sonoma up 19%, whereas Dollar General on the other end of the spectrum down, I should say, just shy of 5%. So it really tells you that not all retail is created equal. There is that divergence already being priced into the stock market. Let's see if the underlying economy follows, Emily.
All right, Kriti Gupta, Ed Ludlow, thank you both. Moving on now to Google, planning major investments in the United States. The company says it'll spend more than $7 billion to create at least 10,000 full-time jobs here. This year, more than $1 billion will be spent in Google's home state of California. There will also be data center expansions across several other states. For more, I'm joined by Bloomberg's Nico Grant. Nico, a huge number. They're also investing in commercial real estate. But of course, it's less than the $10 billion they promised to invest last year before the pandemic hit. What can you tell us?
Yes, it's true that last year they had promised $10 billion. The pandemic happened, and CR CEO Sundar Pichai said that the company would have to scale back on the hiring it had done. And the previous year, in 2019, it had pledged $13 billion. So we've seen a decline across these areas. But it's a very bold statement about where Google sees its future. It's no secret that the company has for well more than a decade now, invested in very pricey real estate, including, owning Chelsea Market, which is iconic in New York, a landmark. But the company is really envisioning that it wants to bring workers back at a time when many of its peers are saying that it's fine having a distributed workforce for an extended period of time, and that if employees want to continue to work from home, that's okay with them. Pichai has been more concerned about what might be lost with Google's culture if there was a true permanence to this current state during the pandemic. It's a company that has thrived on the types of spontaneous collaborations and independent projects that may turn into real products in the future. And so in September, Google employees will be expected to come back to the office about 3 times a week at least.
That's interesting. Definitely want to hear your observations comparing and contrasting the philosophies here. We've heard Mark Zuckerberg say he thinks 50% of employees will be working from home by the end of the decade. Reed Hastings of Netflix says he wants everyone back in the office. What is the sort of feeling among Google employees about this sort of hybrid model?
I think that many employees, including ones at Google, would like some ability to make a decision. What's most important, of course, is feeling like you're safe in the first place. And so Google had originally envisioned that their employees might return to the office sometime in the middle of this year, which we had heard a lot in 2020, that perhaps June or July of 2021 might be a suitable time. Now with the vaccine rollout, perhaps really coming into full shape in May, September, when kids may be able to go back to school, which is another consideration for a lot of working parents, now seems acceptable. But around the margins, you can expect some flexibility. It's 3 days a week. There may be opportunities to work with your manager if you have, special reasons or requests to be able to work in this way.
All right, Nico Grant covering Google for us. Thanks so much for that update. Now, coming up, his nonprofit education organization has seen rapid change amidst the pandemic as remote learning became necessary for millions of students. I'll talk to Sal Khan, founder and CEO of Khan Academy, who has big plans to use a recent donation from none other than Elon Musk. This is Bloomberg.
They just recently gave a $5 million donation to Khan Academy. Elon, I hope you really feel good about this. This is going to allow us to accelerate all sorts of content.
The Centers for Disease Control has said it is, quote, critical for schools to open as safely and as soon as possible and remain open. But the agency's own guidelines of physical distancing of at least 6 feet has made that hard for many school districts across the country. That, coupled with resistance from some teachers' unions, means that remote schooling is very much still a reality for millions of families 1 year after the U.S. shutdown, and as a result, remote learning has shot up in demand and scale like never before. The nonprofit education organization Khan Academy saw its school districts grow from just 9 before the pandemic to more than 200 now. With perspective and predictions on education across the country and around the world, we've got Sal Khan, founder and CEO of Khan Academy, with us. Sal, good to have you back here, as you have been several times over the last year. You in the past have warned about an education catastrophe as a result of this push into remote learning. In your view, did the catastrophe happen or did we dodge it?
So we've dodged certain aspects of it. So the data that we do have that came out, especially last fall, when some kids got to some form of assessment, is that for certain groups, the learning loss has not been as significant. But the big asterisk on all of those assessments is that there's about 10 or 15% of the kids who didn't even show up for the assessment. And everyone suspects that those are the 10 or 15% of the kids who have suffered the most. So I still hold by the fact that this is going to have to be disaster recovery. The very fact that even of the 85% we were able to measure, we saw a degradation by about 10, 15%. And then that 15%, they've literally fallen off the radar. And so when we get back to some form of normalcy, we're going to have to do a lot to make sure that their gaps don't stick with them forever.
So do you think the learning gap ultimately will close, or is it only going to get wider over time?
Well, the hope is it does not get wider over the time. But, there's been an interesting phenomenon where I think for a lot of families, because of the constraints of COVID, they've actually discovered new things that work well for them or work well for their children, where they're like, look, there's some really great things that are happening in the physical school setting, but I could go on Khan Academy. I could go on schoolhouse.world, which is another not-for-profit I recently started up to give free tutoring. There's other resources that you might be able to do, pod schooling, where for some kids, they're getting even more personalization and their learning is even accelerating. There's actually evidence of that too, that the distance learning has accelerated certain kids. And so that creates a fear of, just as everyone's talking these days about, hey, is technology going to accelerate the economic gap? Is it also going to be a situation on the learning side? Now, we think what we're going to see is for those who do have access to technology, it's actually going to close. And there's, as we know, there's a lot of folks in the bottom half of income earners, even the bottom quartile, who do have reasonable access, at least to cell phone. But then for those who aren't in a position to leverage it or aren't given the context to leverage it, I think the gaps might grow.
Now, Khan Academy has obviously been a huge support for so many kids, and as a parent, I'm super grateful. You've seen huge growth. What trends are you seeing now as schools start to reopen, if slowly?
So one of the fascinating trends we saw, we've talked a lot about almost a year ago when the closure started happening, we saw our traffic go by a factor of 3. And in 2020, we saw 12 billion learning minutes on Khan Academy, half of which was teacher directed, half of it which is students on their own. And that's a record for us. So 2020 definitely hit that. But what we're seeing is there's overall systemically less learning time going on. When we talk to some of the large districts or large charter networks, they've been talking to us about, we don't think we have enough class time to cover everything in calculus, to cover everything in algebra, to cover everything in chemistry. So now they're leaning on resources like Khan Academy and resources like schoolhouse.world to make sure that their students are able to have the exposure, because the total amount of learning time in the whole system seems to have gone down.
So there is still a lot of uncertainty, Sal, about what happens in the fall, given that children likely won't be vaccinated. We won't have a vaccine for kids by then. If we don't have one, do you think schools should still reopen in the fall?
I feel pretty strongly that they should. There's very little evidence of child-to-child transmission. There's been several school districts. The state of Rhode Island famously never shut down. They just took precautions, and this was obviously pre-vaccine, and they have no cases of child-to-child transmission in the state of Rhode Island. And this is a state commissioner that I know well, and we've worked closely with well. And so if that worked even pre-vaccine, I personally believe, and my wife's a physician, we talk a lot about this. I've even taught a little bit of immunology on Khan Academy. Once the adults are vaccinated, and maybe some of the older teenage level students, the risk of young child-to-child spread, especially if people are still taking precautions like wearing masks, or there's a little bit of distance, or you're leveraging outside, I think the potential risks are at that point lower than you would have from other illnesses like the flu. And the potential harm of not going to school, which is significant. We're seeing anxiety, depression, social emotional skills really suffering right now. That's going to turn into the epidemic if we don't get the kids back to school.
Moderna recently released some new information about the studies that they're doing on children. We're getting more detail on the Pfizer pediatric trials as well. That said, some parents might not feel comfortable sending their kids back to school. And I wonder what your biggest concerns are in that situation. Inevitably, some kids, I would think, aren't going to go back.
Yeah, I think it's just got to be a lot of education about this, because once all of the adults are vaccinated, and frankly, once the parents are vaccinated, especially if we're talking about younger children, if we're talking about under the age of 12, there's almost no evidence of child-to-child spread. Once again, especially if all the adults are vaccinated. And then even we know, there's some horrible stories we hear every now and then about a young child who gets COVID with bad outcomes. But those are still few and far between relative to other things like the flu, which kills thousands of kids every year. So I think we just have to have education about putting everything in perspective, because it's easy to hear a few horror stories on the news that highlight these 1 in a million cases, but the real odds are very safe from a COVID point of view, and the mental health and the harm to your education that the children will suffer is a far bigger risk.
Now, this is another interesting trend. We spoke to Melinda Gates, who's really concerned about women backsliding in the pandemic, and we found that more women are dropping out of the workforce where there are more kids in remote school. So if women have lost their jobs or they've left their jobs, you wonder if they might feel more flexibility to keep their kids at home, whether or not it's a good thing. What do you think about that?
Well, there's definitely that movement, and I do think this has been an unfortunate trend where, as the families have had to take on more of the childcare responsibilities and keeping the kids up with schools, it has fallen disproportionately on the women in the families, which is really hard on their careers and all the rest. But this trend of some families actually discovering during the pandemic that certain aspects of pandemic schooling were actually working well for their children, I think is going to continue. I talked to the state commissioner of Alaska, which you can imagine already had a large homeschooling population because of their geography and access to schools. They've seen their homeschoolers go from 10% to 25% of the state. So it's not a niche thing in their state. And they don't think it's going to go back to 10%. They think it's going to maybe go back to 20%. But all of a sudden, pod schooling, homeschooling, or some hybrid between normal schooling, traditional schooling, and homeschooling, pod schooling, I think is going to become more and more the norm.
Meantime, the stimulus bill, $170 billion to help schools, though schools might be facing some pressure to use that quickly. How much will that help? How are you expecting that money to have an impact?
Yeah, this is the hot topic these days. I actually have a meeting with a bunch of state education leaders and district leaders tomorrow to discuss this exact same thing, because behind closed doors, everyone is both very excited. They're like, wow, $120 billion, 20% of which is for learning loss. I mean, billions and billions of dollars. But behind closed doors, they're like, we're going to have a lot of pressure to put it to work fast, to do stuff by this summer, to do it by back to school. But they're afraid that if it's not well thought out, this money could easily disappear as large as it is. And then obviously if it disappears, then people will be skeptical the next time. Now, the things that people are talking about, high quality, high intervention, high dosage tutoring.
Okay.
That's something that we're hoping to do through schoolhouse.world, where anyone can go right now and either volunteer to be a tutor or get free tutoring for their children. But this is free. We don't charge people for this. So I'm like, maybe we should have gotten into that pool of money. Khan Academy, a lot of people view that as part of the formula. As we are free. We do a district offering where the districts get support and training, and that takes some resources. But yeah, I think it is a big question mark of how do you put that degree of capital to work so it has maximum impact, and also if it has positive impact, how it can last well beyond COVID.
We'll have to leave it there. Sal Khan, founder and CEO of Khan Academy, thank you so much for joining us. All right, coming up, we're going to hear from Senator Elizabeth Warren. Up next, her push for a bill that would provide $500 billion for green mass transit. This is Bloomberg. Progressives in the House and Senate have introduced a $500 billion proposal to shift U.S. transport away from fossil fuels. Earlier, Bloomberg caught up with Massachusetts Senator Elizabeth Warren.
Oh, I think we're going to be able to work with a lot of Republicans, and I really mean that. Right now, the White House is putting together its infrastructure package, and it's all kinds of pieces. The part I've got here is about transportation. It's about buses, it's about subways, it's about commuter rail, it's about cars, electric cars. It's about all the ways that we move people around. And it says when we put together this big infrastructure bill that will also include water and power grids, this ought to be our transportation piece. We do that piece. That's the part that currently creates about 30% of all carbon emission in the United States. This plan brings that down to zero and makes it possible for us to have a new state-of-the-art transportation infrastructure that's green and that's efficient and works.
So when you think about bipartisan support for this, who are the Republicans that you are specifically hoping to get on board with this? Who are you talking to?
I'm talking to all 50 of them. Because but I'm serious. You name a Republican who lives in a state, who represents a state that doesn't need an upgrade in their infrastructure. Right. Name a Republican who isn't struggling back home with problems of gasoline-powered or diesel-powered buses and trains and mass transit, highways that need repair. We can do this together. It's kind of one of the things that's sort of everybody's best view of what the Senate ought to be able to do. So work together to build a stronger future.
Senator Elizabeth Warren there. You're taking a live look now at Anchorage, Alaska, where U.S. and Chinese officials have begun the first talks since the Biden administration took office. We're seeing Secretary of State Anthony Blinken meeting with top Chinese Communist Party officials, including Wang Yi and Yang Jiechi. We've been listening to Anthony Blinken make some remarks. He says the U.S. is committed to continuing to lead with diplomacy, says they'll talk about Xinjiang, obviously human rights issues happening there, concerns about Hong Kong and how the Chinese government handled that situation, and says that some Chinese actions have threatened a rule-based order. We're continuing to listen to Secretary of State Blinken's remarks. We'll continue to bring you highlights. But again, U.S. and Chinese officials meeting for the first time in person since President Biden took the White House. All right. Coming up, we're going to speak with the incoming CEO of Qualcomm about the company's completion of its $1.4 billion acquisition of chip design company Nuvia. Our exclusive interview is next. This is Bloomberg.
Semiconductors, or chips, are essential components in things we use every day. They're made from the material that gave Silicon Valley its name, and they handle everything from artificial intelligence processing to simple functions like translating the press of a button into an electronic signal. Think of them as the brain of a device. So what happened? When the pandemic shut down car factories in March, automakers expected less orders for passenger vehicles, so in turn cut their orders for chips. At the same time, working from home and 5G drove demand for laptops, smartphones, cloud services, and data centers, so those industries increased their orders for semiconductors. That caused chip makers to switch production to those areas rather than pile up chips they couldn't sell. But what both car and computer companies didn't expect was a quick rebound in demand for their products. So here lies the problem. There's now not enough supply to meet demand, and building chip factories takes years and costs billions of dollars.
The answer in the near term is nothing can be done in a grand way that can infuse supply. Supply expansion takes time, takes addition of new factories, addition of new capacity.
How bad could it get? Chip shortages are expected to wipe out $61 billion of sales for automakers alone. And big chip makers like Qualcomm, NXP, and Infineon say the auto industry isn't the only sector to get hurt. Games console makers say things will get worse before they get better, potentially impacting holiday sales. President Biden has signed an executive order to look into why the US is so reliant on overseas chip manufacturers like Taiwan's TSMC and South Korea's Samsung.
Companies such as Qualcomm, AMD, NVIDIA, all of these companies don't have factories of their own and rely on third-party manufacturers, and over the last decade or so have become extremely reliant on TSMC.
So how long before supply meets up with demand? Well, it's a guessing game, but some analysts say we won't see signs of a turnaround until the second half of the year. Ed Ludlow, Bloomberg News, San Francisco.
All right, Ludlow reporting there on the global chip shortage. Ed joins us now. Catch us up, Ed, on how chips are performing.
Yeah, chip stocks, the Philadelphia Semiconductor Index, or SOX, under the same pressure that the rest of the tech sector is on Thursday, down 4.2%, biggest decline in a week. Some of the names putting it under pressure: AMD down 5.5%, Intel down 3%, and Qualcomm, of course, also down 3.1%. Come with me into my Bloomberg and look at this chart. It's all about volatility, SOX 30-day volatility. You can see that it's been creeping up recently. I think that that's not quite the right chart, but we'll pull it away. Volatility in the Philadelphia Semiconductor Index has been on the rise recently, around a May high, but it's nowhere near where it was when the pandemic first hit the United States, as well as China and Europe. And you forget that when the pandemic hit the US in March, that was a shutdown of our economy. But prior to that, it had already hurt China's economy. And part of what I learned in that reporting that story is how closely chips are tied to the consumption, the demand side of the economy, right? So in terms of how the SOX has performed relative to the rest of the broader market, yes, outperformance, but you can see that that gap has really narrowed in recent weeks. The Philadelphia Semiconductor Index, always one to watch. We've always talked about outperformance. The question that you've got to pose to your guests is how much longer will that outperformance last? When will we see the supply and demand equation rebalance, Emily?
Ed, we're going to ask our next guest that very question. Thank you so much, Bloomberg's Ed Ludlow. Staying in chips, Qualcomm recently completed its $1.4 billion acquisition of Nuvia, a chip design company founded by 3 high-ranking Apple engineers. Joining us now for more, Cristiano Amon, Qualcomm President and CEO-elect. Cristiano, great to have you back here on the show. So first of all, what do you plan to do with Nuvia, and why did you think it was important to bring chip designers in-house?
Hi, Emily. Always good to talk to you. Nuvia is very important acquisition for Qualcomm. We're very excited about closing the acquisition, and will enable Qualcomm to take a leadership position in CPU performance, especially for the upcoming conversions of mobile and PCs. With the acquisition of Nuvia, you expect Qualcomm not only to continue to have the leadership position in CPU performance in mobile devices, as Nuvia CPUs will be part of our premium, Snapdragon chipsets, but also part of us developing dedicated computing parts for the future conversions of mobile and PC. And we are going to be sampling computing parts in 2022 with the Nuvia CPU for mass scale in 2023. We're also going to use that CPU technology in automotive, as electrification drives a lot of general high performance, power efficient computing platforms in cars. So again, very excited about that, and creates a new chapter of growth for Qualcomm in computing.
I'm really curious, Cristiano, about how you want to make your stamp on the company as, incoming CEO. What are your top priorities? Where do you want to take the company as we come out of a pandemic? And presumably, how we use technology will change dramatically once again.
Look, the long-term story of Qualcomm is incredible. And it comes, Emily, from the fact that the demand for our technology right now is no longer just unique to the mobile segment. Look, for me, I spent the past 3 years accelerating 5G. 5G will continue to be a very important priority for Qualcomm. And when you look at 5G alone, we have both the core business, but opportunities outside the core business. One of the largest opportunities for Qualcomm, the largest we have seen in the core business, past driving 5G into our existing customers, past, the resume the business with Apple. The largest opportunity we have ahead is as Huawei, has been changing their position. They were very large. They were shipping 200 million devices. That opportunity became available for customers of Qualcomm, whether it's a Samsung, a Xiaomi, a Vivo, or Oppo. And that is an expansion, allow us to Qualcomm to grow at a very high rate in the market that is growing single digits. So we're going to be very focused on that. Unlike when we sell a modem only, this is an opportunity that we sell premium, Snapdragon MSMs. It's about a 4 to 5x value, and we're very excited about that. That's number one. The other one is what you saw, the company transforming itself, and it tells you a little bit about the future of Qualcomm. It's a company that is not about just the QTL licensing business and in the handset business. It's a company that will have a number of different businesses, as we have done in the past 2 earnings calls. We're going to have a handsets, RF front end, automotive, and IoT. And we're just scratching the surface of IoT. Just reached $1 billion business in the last quarter report, and we have a lot of opportunities ahead.
Now, Cristiano, as we've been speaking, U.S. and Chinese officials have started their first talks since President Biden took office. Obviously, the relationship between the U.S. and China has been under incredible tension. That tension has impacted the chip industry, and Qualcomm has a huge footprint and important relationships in China. What would you hope the next chapter of U.S.-China relations involves as it pertains to your business?
Despite the tension, our business with China has been growing at an incredible rate. And I think we're very privileged, our position. We resolve our license dispute with Huawei, and now we're growing, including with new customers like Honor. To answer your question, I'm optimistic that for areas like in the technology sector, like we are in 5G, we play a very important role for both the growth in the United States as well for the companies in China. And we expect that cooperation will continue in the areas of technology, and we're optimistic about the future. As I said, our business in China will continue to expand.
Now, we have to talk about the chip shortage, and I would love for you to break down what is happening, why is it happening, and when do you think supply will catch up to demand? And will soon supply outpace demand?
It is one of my favorite topics these days, as you can imagine. We're still growing as a company, but as we had said in the last earnings call, our ability to meet demand is now paced by the supply availability, and everything is short. There's not a single industry that not been impacted by the semiconductor shortage, from automotive to IoT to home, and it's just because of all those different trends that accelerated consumption of semiconductor that we saw during the pandemic. We have line of sight that demand and supply are going to align by the end of this calendar year. We started to see now some of the capacity investments coming online towards the end of 2021, and we expect that this crisis is going to be behind us. Now, you asked a very important question. Will supply exceed demand? We ourselves, as I said before, we're very fortunate because some of those drivers of demand for Qualcomm, they're here to stay. We see this expansion on mobile, in the market that was served by Huawei HiSilicon. Now it's an opportunity for Qualcomm to participate. We saw a big acceleration of IoT with the digital transformation of enterprises. The company, they send everybody home, so they were connecting all their people, now they're connecting their assets. And we have been in an upswing trajectory with the transformation of the automotive industry, and the cars get connected to the cloud and become computer on wheels. So we expect to continue to see growth. And in general, the pandemic, what will take 5 to 10 years of the role of technology, we got an acceleration in about 2 to 3 quarters. And a lot of the demand is going to continue into 2022 and beyond.
So, we've got about a minute left, Cristiano, so we'll have to keep it short. But, you're expanding into new markets beyond the phone, beyond laptops. Which of the new markets, whether it's cars or another market, do you think will be the first to really take off?
Automotive is very big. That's why we separated that as a separate segment. The digital cockpit transformation and electrification are big drivers. Following automotive is really the digital transformation of enterprises with industrial IoT.
All right. Cristiano Amon, Qualcomm President and CEO-elect, anxious to watch how you take over the company and what your priorities will be. Thank you so much for joining us to give us a peek. Okay, coming up, just a year ago, Sequoia Capital warned its founders and CEOs to prepare for the, quote, black swan. That was the coronavirus. Now the firm is urging everyone to seize a new window of opportunity. Our conversation with Roelof Botha of Sequoia Capital is next. This is Bloomberg. Just over a year ago, Sequoia Capital came out with a memo for entrepreneurs titled Coronavirus, the Black Swan of 2020. Today, Sequoia has sent a new memo to its companies. On March 5th, 2020, we urged you to prepare for the impending storm. Today, we're at another inflection point. The U.S. is poised for stronger economic growth in the second half of 2021 than we've seen in decades. Our advice for founders and CEOs in this uncertain environment: remain deliberate and measured, but don't be afraid to dream and be optimistic about where the world is going. Here to discuss this and much more, 1 year on in our pandemic series, Roelof Botha of Sequoia Capital. Roelof, thank you so much for joining us. So tell us more about the thinking here. Why this advice now?
Well, the way we think about this is similar to a racing analogy. And the advice we had a year ago was that there was a very sharp turn in the road. And you better brake before you hit the corner, otherwise you're going to skid off the track. But just like a Formula One racer finds the apex of the turn and accelerates from that position to win the race, we feel that we're at that apex right now for startups. And you have to realize that change unfairly favors startup companies. Technological changes, economic changes, and societal changes have really born enduring companies. The shift to cloud, the shift to mobile, the shift to PC and internet many years ago. And we think that we're at an incredible inflection point. We've been through a year of a pandemic, and the post-pandemic world is around the corner.
You said to prepare for more volatility. What kind of volatility and how?
Well, we think, we need to buckle up. There's turbulence ahead. The pace of recovery will be uneven. At the same time that vaccinations are rolling out very quickly in the United States, Italy is undergoing another lockdown. And so the rate at which we deal with COVID will not be even across the world. Your previous guest just talked about ongoing supply chain disruptions that we face around the world. So we don't think it's a smooth recovery. We do think there'll be bumps. New variants of COVID will emerge. We have to realize there's no post-COVID world. There's just a post-pandemic world. COVID will be with us in various variants down the road, and we'll need to cope with that. But on the whole, we're optimistic that this is a point at which startups can really accelerate and think about what they can accomplish over the next decade and position themselves.
Now, in the Black Swan memo itself, the warning was stark. What if you can't fundraise? Think about your cash position. Think about your headcount and if you can do more with less. And certainly many companies suffered, but many tech companies saw a renaissance. Sequoia had huge IPOs with Airbnb and DoorDash. When you look back, do you think Sequoia at all over-rotated on the warning, or was that necessary at that time?
We think it was necessary at the time. We had a global view. As you know, we have businesses and presence around the world. And so we had an inkling of what was happening. We also have the benefit of nearly 50 years of experience in our US business. And we told people not to panic. We told them to pause and just think very deliberately about what to do next. Now, in full truth, we had a few portfolio companies that lost 80% of their revenue overnight. Eventbrite and Airbnb were two companies who were affected significantly. overnight, and they had to make meaningful cost reductions to make sure that they could navigate to a brighter future. But we also saw that some companies had to accelerate, as you pointed out. Companies like DoorDash and Instacart, companies like Zoom that had to deploy technology around the world to make sure that they could cope with increased demand. So our call was really a call to just pause and be deliberate, not panic.
Now, you recently closed a Europe-focused seed fund. You've also got a huge business in China. You personally led Sequoia's investments in YouTube and Instagram and Square. And looking at your new memo, you say the big question is which behaviors will persist over the next decade and which will be fleeting. What behaviors are you doubling down on at Sequoia? What do you think will be fleeting?
Well, I think one of the phrases we came up with last year, which I still believe very strongly, is COVID is the shock that accelerates the future that our technology companies have been building. And it was inevitable that there was a future of food delivery, of enterprises embracing cloud infrastructure, of machine learning finding its way into more and more applications. And we think that most of these are just things that were inevitable that were pulled forward to the present. And so most of our companies are benefiting from this change. I'd say the thing I'm most excited about are the companies that in this post-COVID world figure out how to help us with a hybrid environment, an environment where we harness the best of an in-person experience and the best of technology rather than them being at odds with each other. So that's where we spend a lot of our time right now.
Given that you're on the board of Square, I have to ask how enthusiastic you are about Bitcoin and cryptocurrency as we see Jack Dorsey doubling down. What's Sequoia's view?
We've been active in the cryptocurrency field for a while. I'm probably most excited about the ability for what they call programmable contracts, where you can use cryptocurrencies to make things a lot more efficient. And so that's probably the area of greatest interest for me.
You're also an investor in Verkada, which is the video security company. They just had a big hack video inside of really important companies like Tesla, hospitals. They've had some criticism about their corporate culture and how they treat women. I know Sequoia is really hands-on with their portfolio companies. How are you handling this one in particular?
I think in this case, the company reacted very swiftly, and they're sending out very frequent updates on a daily basis as they're investigating and making sure that this is an experience that is not repeated.
Now, as work becomes more distributed, I'm curious what your thoughts are in continuing to invest in companies that don't have a home office, where maybe employees are working in a lot of different places versus, more traditional companies where everyone's going to be back at the office. Does Sequoia have a view on that or a preference as to how their entrepreneurs work?
I think it's really up to them, and that's part of the beauty of embracing a different future. The truth is that opportunity is not evenly distributed, but talent is far more evenly distributed across the world. And historically, Silicon Valley has been an incredible point of focus, a magnet for technology talent from around the world. But increasingly, we're seeing technology talent remain where they are. So a company like MongoDB has an incredible development team in Sydney. Unity, where I've been on the board since 2009, started in Copenhagen, and they have development offices in over a dozen countries. And so they've been, part of this remote work movement for a decade. It's not new for them. So I'm actually really excited about this ability to embrace talent wherever it may reside. Given that we've evolved as a social species, I suspect people still benefit from that in-person, in real life experience. And we saw a little bit of this at Eventbrite last year when New Zealand came out of lockdown. The online event space in New Zealand continued, but it turned out that people snapped back to that old in-person event basically at a pre-COVID level almost immediately. It's just who we are as a species.
All right, Roelof Botha, really fascinating to have you here and hear what you're thinking lies on the road ahead. Thank you so much for joining us, Roelof Botha of Sequoia Capital, and you can check out their new memo to entrepreneurs. All right, the NFL's $105 billion TV deal coming up. We're going to bring you the latest on what that includes, a historic contract with Amazon. More next. This is Bloomberg. NFL just announced a new series of long-term TV deals valued at an estimated $105 billion, including a historic contract that gives Amazon exclusive rights to Thursday football broadcasts. Under the accord, CBS and Fox will continue to carry daytime games on Sundays and gain expanded digital rights. NBC will retain rights to Sunday evening telecasts, and ESPN will keep Monday Night Football. The agreements start with the 2023 season. And that does it for this edition of Bloomberg Technology. Tomorrow, we continue our conversation about the pandemic 1 year on with Zoom CFO Kelly Steckelberg. Zoom, of course, has seen explosive growth over the last year. We'll talk about that and their next chapter post-pandemic. Don't miss it. Bloomberg Daybreak Asia coming up next.